Trading the currency markets is a complex business, not least since we are dealing with pairs of currencies and by extension, pairs of economies. All economies around the world are interlinked and reflected in the constant ebb and flow of currency strength and weakness. The problem for us as forex traders is monitoring so many pairs simultaneously, since every pair does not move independently but reflects the interrelated nature of this market. The amount of information can be overwhelming when we consider just the 8 major currencies and the 28 currency pairs they then create. This is difficult enough, but when we view these on multiple time frames, the numbers become unimaginable and require arrays of multiple monitors and screens simply to keep track, an almost impossible task, and for 3 simple reasons. First, the technology and space required to track so many combinations of pairs is expensive and beyond the reach of many. Second, in focusing on one pair due to limited space and computer resources, opportunities are constantly missed as it's impossible to spot them across all the timeframes. Third and last, trading is all about managing risk, and in every trading decision to achieve maximum profit, the most powerful risk tool is information. This is where the quantum currency heat map steps in. It delivers the complex information you need as a forex trader fast. In fact, so fast it displays a total of 252 chart snapshots on one screen. That's 28 currency pairs in 9 timeframes. Almost impossible to imagine if displayed in a conventional way. Now, thanks to the quantum currency heat map, seeing and interpreting this much trading data has never been so easy. The quantum currency heat map does this by displaying the hottest and coldest areas of the forex landscape using an intuitive color coding scheme. It's like a thermal scanner, but for forex. Like its sister indicator, the quantum currency matrix, it assigns a rank to each of the 28 currency pairs, but from data across the time horizon. Currency pairs are then ranked vertically and horizontally to describe strength and weakness in 2 dimensions, the ultimate heat map of bullish and bearish sentiment in all time frames and at the click of a button. The indicator delivers the information you need to base your trading decisions on the data of an entire spectrum of currency pairs derived from the 8 major currencies, namely the US dollar, the euro, the British pound, the Swiss franc, the Japanese yen, the Canadian dollar, the Australian dollar, and finally the New Zealand dollar. In one clear, simple and intuitive table, you can see instantly the entire weight of market sentiment across all 28 pairs and across all the time frames. In other words, a global view of risk and sentiment on one chart in 2 dimensions, vertically in the ranking table and then horizontally across the horizon of time. Instant, simple and powerful. No multiple monitors, no multiple PCs, no crowded screens, and no chasing from one time frame to another and back again. It's all here allowing you to make instant decisions in seconds for every major currency pair and profit accordingly. It means you'll never miss another opportunity, never struggle to find opportunities, and with all the information you need to make risk-based decisions across the time frames. So what does the indicator actually display? Vertically, the 28 currency pairs are listed and ranked from the most bullish pair at the top to the most bearish pair at the bottom. Horizontally, the performance scores of each currency pair are displayed in 9 time frames, from the 1 minute through to the 1 monthly chart. Each cell of the quantum currency heat map is color-coded so you can interpret it instantly with a quick glance. If we start with the performance scores themselves, this is the value the indicator assigns to each currency pair, representing how positively or negatively its price moved over a certain period. It can be either of the two colors depending on its value, and this is the color coding used when viewing the currency pairs across the time horizon, the horizontal in other words. Green if the currency pair's performance score is positive, and red if the currency pair's performance score is negative. The pairs are then ranked vertically using a dynamic graded color, transitioning from green to yellow and to red in that order. The performance scores of the currency pairs in 9 time frames are added together. The currency pairs are then ranked by their sum from the most positive to the most negative and are color-coded as follows. Green shades, the sum of the currency pairs' performance scores in 9 time frames and weighted accordingly, is well above the fulcrum of 0. Yellow shades, the sum of the currency pair's performance scores in 9 time frames and weighted accordingly is relatively flat and around the fulcrum of 0. It can be either positive or negative, but trails the numbers closest to 0. And finally, red shades, the sum of the currency pair's performance scores in 9 time frames and weighted accordingly is well below the fulcrum of 0. The gradation of color is dynamic. Hence, the transition of colors will depend entirely on the sum of the currency pair's performance scores in the 9 time frames. As with all our other indicators, this is dynamic and is constantly shifting in real time to reflect the ebb and flow of sentiment across the time frames. As you might expect, the indicator applies a weighting in the ranking ladder to reflect the fact that a trend in a slower time frame has a greater significance than one in a faster time frame. This is all part of the dynamic algorithm which constantly sums, weights, and then reorders the ranking table on the left of the indicator. The currency heat map is all about context and risk assessment of the trend in the different time frames. In other words, a micro and a macro view. The micro view is of each time frame and how the currency pair is performing across the time horizon. The macro view is then of the currency pair and its relative ranking, globally in other words. As a forex trader, the indicator delivers the complete view from micro to macro and back again, allowing you to assess risk. If a pair is rising and bullish on the ranking ladder, yet some bearish sentiment is evident on the faster time frames, then you are trading against the dominant trend and a higher risk trading proposition as a result. But in the same example, if the faster time frames are signaling the same bullish sentiment, this represents a lower risk proposition. One indicator and one workspace delivering information from 252 charts. A great return on investment, we think.